But let's move on and bring on the first management for today. We have the management of SOBHA joining in with us. Jagadish Nangineni, Managing Director at SOBHA, joining in with us. Thank you so much, Jagadish, for joining in with us this morning. Good set of numbers has been
Thank you.
reported by the company. Good operating performance is what we're seeing coming in as well. And this is the highest ever quarterly sales for the company in 10 quarters. The 10th quarter in a row is Q3. What is the performance that we could expect going forward? Do you think this is something that you could sustain in terms of the level of growth that you've seen for the company as well so far? And for FY25 as well as Q4, what is the guidance in terms of pre-sales as well?
Yes, glad that we have done so far very well. And like you said, we have the 10th straight quarter of highest ever quarterly sales. We have a huge sectoral tailwinds that have helped us. And particularly in the last couple of years, if you have seen, given the current strong demand environment from the customers, whoever has had the supply has been the winner. And hence, going forward as well, we have a very strong pipeline of launches, and those launches should help us achieve a better sales growth from what we have seen.
I would, look more on a yearly basis.
From FI for this quarter as well, it is last year we have done about 5,200 crores of sale, and this year in the overall year basis, I think we should be able to achieve at least 20% of growth on that. And for FY25, the plans are still on, and if the launches come out really in time, then we should hope to see at least what we have done, or if not, there is a growth. The plans are still being worked out, and we'll be able to sort of give the details in the coming months.
Jagdish, I want to know a little bit about your margin performance, just over 10%. The industry margins are slightly higher. Do you have a strategy to take them higher going forward? Is there a particular reason why your margins are under pressure right now?
Absolutely. We have been recognizing revenue of the projects which we have launched and ongoing, which we have launched and sold pre-COVID. And this is precise. This is clearly a pre-COVID pricing and post-COVID costs, which is the effect that we are seeing as we are recognizing those projects which we have completed. Going forward, we have about 12,000 crores of unrecognized revenue, which is coming at a much higher margin. And those we will be able to recognize as we complete those projects in subsequent quarters and years.
Right. Jagdish, how's your overseas portfolio doing? Has it started contributing very meaningfully to overall numbers or not just? Where would you like to see it go?
Well, our Dubai business is from the same promoter, but that's not part of the listed entity in India.
Okay, good for that clarification. Good to have that clarification. Thanks so much for that, Jagdish. But yes, you'll appreciate me asking this question at a time when rest of the real estate players have been reporting a very good growth in terms of the revenue, margin performance as well as profitability. On a year-on-year basis, your numbers are a bit lower. And as you pointed out, in this kind of market, whoever has the supply is the key winner. Has there been a delay probably in your supply pipeline that has led to this lower booking of revenue, or what really played out? I'm still trying to understand that gap.
Yeah, it's a very good question. Just to clarify, in real estate, the revenue is recognized as we complete the projects. So the projects that we are completing are the ones which we have launched and sold pre-COVID. And that's the reason why the revenue and the margin, particularly the margins, are under pressure. The revenue, again, we would start seeing significant uptick in the revenue as we increase our pace of deliveries, which we would increase in the subsequent quarters. And those coming in at a higher margin will also increase the margin percentages as well. So while you are saying that a lot of other real estate developers are seeing good uptick in the revenue, probably you are referring to both to the pre-sales, which we have also recorded quite significant growth. In fact, Last financial year, we did 5,200 crores, and this financial year, in the first 9 months, we've already touched about a similar number, and we are looking forward to a good growth this financial year as well.
Sure. Jagdish, the only worry I had was because of your unsold inventory jumping up quite materially on a quarter-on-quarter basis to 5.6 million square feet versus 3.5. So I was just worried if there is a bit of a delay in terms of, because other players are reporting, the inventory is being sold on in a couple of days of the launch itself. But I'm guessing it's a bit of a timing issue. But if you can come in quickly on that, and as well
Yes.
as the debt picture, because given the robust pipeline that you have, is debt expected to go up materially? Should we be prepared for that?
Uh, on the debt part, we have a very high focus on cash flow management, and for the 13th straight quarter, we have generated positive net cash flow, and we have reduced our debt. Current net debt to equity has come down to 0.54. Because our focus of cash flow management, we would continue to have that focus, and even during the growth phase, we would continue to generate positive cash flow is what we expect to do.
Thank you so much, Jagdish, for joining in with us this morning on EG Now, giving us an understanding in terms of the numbers, the growth trajectory going forward, as well as your debt levels as well. Thank you so much for that. But that was the management of SOBHA for you all joining in with us, keeping an eye out on that stock in trade today as well. But let's bring on board Sandeep Sabharwal now.